Money Matters with Zurich Life Insurance. Take optimistic action and shape your financial future with Zurich Life Insurance.
Would your family be able to manage financially if you were not around to take care of them? It is a question that no one really wants to ask themselves, but it is so crucial because amid the grief, amid the diagnosis, truly the last thing anyone wants is for their family to be worrying about the financial side. So we're taking your questions this afternoon, and joining me live is Walter Jopp. He is CEO of Zurich Middle East. Mr. Jopp is with us until 5 o'clock today, and I hope you've had your coffee, Walter, because you're a very popular man on the SMS. Jay has been in touch saying, my mortgage is already covered in the event of my death, but I'd like to get additional cover so my wife and son would receive a sum if I were to die. My question is, how long should I get cover for? I was thinking up until age 60. I'm 35 now, and my son and any other children we have would be adult and less in need of a payout, but would still inherit property. So coming back to our question, how do you calculate how long? Jay is saying up to 60. What would you recommend, Walter?
I think it depends on everybody's circumstances, Helen. 60, 65 is quite a normal age that people would take a top-up insurance. And it's important to understand you can take insurance for 5 years or you can take it for the whole of your life, right? So there are various options that you can. And each one of those options is different and it costs differently. So I think, but if you think about somebody's normal life, they in their 20s, they get their job, then they get a family, they get married, have kids, then the expenses go up. That needs to be covered for a period of time. So you can get insurance that covers you for that extra amount that you need for a set period of time. And then you can reduce it when you get older in life. And, you're then assured that your kids, your loved ones are looked after.
I think a lot of people didn't realise the flexibility in there, actually, which is really valuable. No name on this one. It might become clear when I read out the message why she wishes to be anonymous. Message saying, my husband and I have a large age gap. I'm the younger one and have my own private life insurance, which pays out to my husband and 3 daughters. It's a large policy. Husband only has life insurance at work, so if he dies in employment, they pay out. Therefore, if he retires and then dies, I will get nothing. I need to be practical and sensible. He is the breadwinner. I would like to take out policy now, but as he's older, it could cost a lot. He is not keen, says I should use my savings to live. Am I being unreasonable? Should I pay for him to have a policy? What do you think? Can you take it out on behalf of someone else, or do you need to have their permission?
Yeah, you right. Everybody's case is individual, but you can take out life insurance on somebody else, depending on the circumstances. I think it's important that we get a lot of questions that say, look, I have enough savings, I have money, and that's brilliant. But what life insurance can do is actually protect those savings, because presumably you're saving that money to try and do something with it at some other point. And if you really want to be using that to change your life, to relocate, to change your house, to do whatever it is you need to do to change your working patterns. So the answer is, yes, you can take the life insurance. She can do that. I would discuss it with your husband and maybe go and see a financial advisor to go through the pros and cons of each, because whilst it might seem sensible to use your savings, depending on your circumstances, that it might be far more effective to essentially pay life insurance and protect yourself that way.
Hope that helps. Roa is asking, would a payout cover any debts? Which I think is actually front of mind for a lot of people right now, whether that's credit card or taking a loan, maybe looking to bridge a gap between reduced salary. Would that be beneficial? Could it go to the bank if need be?
Yeah, this is really common, Helen. Most people, when they take out a mortgage, the financial institution may well ask them to take out some life insurance to cover just in the event of something going horribly wrong. That debt gets paid off. So you can actually use and in that case, the policy is assigned to where the debt is. Yeah. So, for example, myself, something happens to me. I'm the breadwinner in our household. And I have a mortgage. When if something was to happen, the life insurance policy pays directly to the bank for the amount outstanding. So and then it gets resolved, and then you get your loved ones get to keep the house, and then they can do with it what they like. Okay. But you can use it really. If you don't have it tied to a mortgage per se or a loan, you can use your life insurance in any way you want.
I'm getting a bit technical here, but anonymous message saying, I know this might sound like a stupid question, but I don't know a lot. If you're getting life insurance for your mortgage, do you have to get it so it starts on the day you buy the house? So nitty gritty, a lot of people are looking to buy right now. How aligned do those dates need to be, Walter?
Yeah, you do need to have it in place before you draw down the money. Otherwise, you're going to have taken the money and you're not covered for the insurance. So you want them to start at the same time. And a good financial advisor or your bank can help you with that to ensure that the dates aligned.
OK, brilliant. Can you talk us through, if you wouldn't mind, what you don't cover? You mentioned before in terms of claims that have been rejected. Is there anything in the fine print that we as consumers need to be mindful of?
So for life insurance, we cover death. Where we don't, so when I talk about the benefits paid, and this is really important, so we pay 98.1% of all the claims that come to us. And people might say, well, why is there 2.9% of claims or 1.9% of claims that aren't being paid? Well, we have had instances where, unfortunately, we've received death certificates from people that are very much alive. So fraud is a very big area that we have to protect everybody from. And the other one is non-disclosure. So sometimes people forget to tell or forget to put down things that have happened to them. So it's no surprise that non-smokers pay a lesser rate than smokers. And sometimes we get individuals that say they don't smoke, and then if the cause of death is related to that, then that is non-disclosure. So I would urge everybody, when they're talking to their advisors or when they get taken out their insurance, to be honest, because we want to pay claims. That's what makes our industry work, and we want to pay everybody, and that is our ultimate goal.
I think that's, yes, exactly. Be honest, or it could come back to bite you on the behind, or indeed your family years down the line. We did speak recently, and it's a really grim title of a show, but we talked about death admin. And this came about because my husband and I went away for a wedding and left our kids with my mum and dad. And I had what can only be described as a meltdown the night before, going, what if the plane goes down? What if we get hit by a black cab? And, who will know what to do? And what it really was an incredible reminder of is having these things in place. Not only having them in place, but actually telling people about them. My husband, as it happens, I think is worth quite a lot more dead than he is alive. So don't come pointing any fingers at me should something happen. I'm just stating the fact. But that's all well and good. But if I don't know where these policies are, where passwords are, what advice would you give to any couples who perhaps keep things very, very separate, Walter?
Helen, that is a great comment that you're making, because if you take anything out of our conversation today, take half an hour to talk to your partner or to your loved ones and to say, look, if something goes wrong, this is what we have, this is where it is, and this is what you need to do. So that doesn't cost anything. And actually, it can prevent an awful lot of heartache, because unbelievably, there are some cases where policies go unclaimed. And that's because beneficiaries or people are not aware that a certain solution was in place. So please do make sure that you do tell somebody. And if it's not your partner, then maybe a relative or maybe somebody of what you want and what you want done.
Couldn't agree more. We now have the death drawer. Who am I? I mean, that's not pretty gross. Or people have death files, the envelope, they call it, and tell people where that is. People you trust, of course. Walter Jopp, thank you so much for your time today. I know you're an incredibly busy man, of CEO of Zurich Middle East. It is zurich.ae if anyone wants to find out more about what we've been talking about this afternoon. As you said, there's calculators on the website so people can do a bit of groundwork, experts on hand as well to take that forward. Thank you so much again. Really, really appreciate your time and looking forward to speaking to you very, very soon.
Money Matters with Zurich.